Hello friends, welcome back to another video. Last week was another crazy one in the stock market with a lot of volatility, especially in social media stocks. Today I want to discuss the massive sell-off in Facebook, now called Meta Platforms, where the stock fell 25% after the company provided a very cautious guidance for the first quarter of 2022. Given this, I want to review their earnings presentation to see if we can determine a fair value for the stock and evaluate our investment options. For full disclosure, I already own some shares in Meta with a cost basis around $300, though it is only 0.5% in my portfolio as I was waiting to buy more at lower prices. I am still bullish on their long-term prospects and would like to build this into a 5% position in my portfolio, so let's jump right in and discuss their 2021 Q4 earnings presentation. So in terms of revenues, the company is still growing it consistently every year, and for Q4 2021, it stood at over $33.6 billion. Obviously, the bulk of this revenue comes from North America, while Europe and Asia are also significant contributors. Further breaking down the revenues, we can see that the major share of revenues come from advertising, specifically from the family of apps owned by Meta, which include Facebook, Instagram, Messenger, and WhatsApp. The other tiny bit of revenue comes from the Reality Labs segment, but this is the segment the company hopes to be a significant growth driver in the future when the metaverse and related themes get broadly adopted in the user community. I think this is still several years out in the future, but certainly Meta has the cash and the talent pool to invest today to build out a solid base to be able to gather a significant portion of the market share as the metaverse unfolds. But in the meantime, this is obviously causing a large cash burn for the Reality Labs segment, and as you can see here, the company booked operating losses of over $10 billion last year, which investors will not feel too good about in the short term. I think this is not a big issue though, as their advertising segment still is growing reasonably well and more than covering for the losses in the Reality Labs segment. Overall, their operating margins are still at 37%, so there is a lot of cushion for the company to continue investing in the Reality Labs business and innovating for the future. As you can see here, the different types of expenses as a percentage of revenues has been pretty consistent over the past several quarters, so I don't think we should be too concerned that there is some sudden spike in expenses. And it is also good to note that the major portion of the expenses are for research and development, which is critical for future growth in any tech-based organization. The diluted EPS for this quarter was at $3.67, and the trailing 12-month EPS was $13.80. The company is still producing a massive amount of free cash flows, which again indicates that they have enough runway to continue innovating for the future and is well placed to overcome any short-term challenges that come their way. In terms of numbers, you can see that the free cash flow this quarter was over $12.5 billion, and in total for 2021, it was over $38 billion. Let's now look at some fundamental metrics before we dive into valuations. As you can see here, the market capitalization is at $661 billion at the time of recording this video, which interestingly was closer to $1 trillion before the stock sold off after the earnings announcement last week. The price to sales ratio is at 5.53 compared to the 5-year average of 7.96, and the PE ratio of 17.27 is also relatively lower than the 5-year average. These two ratios basically reflect the fact that the stock has sold off and investors are assigning a much lower multiple, assuming that the company will not be able to grow as much as they did in the last few years. The price to free cash flow multiple is at 16.91, which I feel is in the territory of fair value, but still not in the extremely cheap category. The financial position of this company is also super solid, with cash and cash equivalents at an astronomical $48 billion compared to the $581 million total debt. Let's now discuss Meta's valuation using some scenarios to estimate the future revenues and profits and see if it is worth investing in this company at the current stock price. As you can see here, I have drafted 3 scenarios with different revenue growth projections of 7, 12, and 18% in each scenario over the next 5 years. Some of you may think that this 7% growth is too conservative, but I feel there is a real risk of significantly slower growth, as the management also gave a very muted outlook for Q1 2022, quoting increasing competition as well as restrictions resulting from updated privacy regulations. On the other hand, the company does have the potential to overcome these short-term difficulties and innovate their way to higher growth, and these possibilities have been reflected in scenario 2 and 3. I have also estimated the future earnings and a price to future earnings multiple under each scenario. So based on these estimates, we can more than double our money if scenario 3 evolves or get a modest return in scenario 2. Scenario 1, on the other hand, is obviously where we could end up with significant losses if the company's growth flatlines in the coming years. In my opinion, the company would most likely beat the numbers I am quoting here in scenario 2, and possibly even scenario 3, as I have not even taken into account the potential revenue boost that could come from some of the Reality Labs investments the company is making today. However, as this may take some years, and since the market is usually focused on the shorter time frames, I do expect some more weakness in the stock price in the short term. So I'll probably add a few more shares at the current price, but will be hoping for the stock price to drop a bit more to add to my position. I think if we can build out a full position with an average cost basis of around $200 to $220, at which point the stock will be trading at a PE ratio below 15, then we can expect to have impressive gains over the next few years. Do let me know your thoughts on Meta platforms and if you plan to buy the stock in the near future. And I hope you liked this video, so please don't forget to hit the like button and subscribe to my channel. And as a friendly reminder, I'm not a licensed investment advisor, so always remember to do your due diligence before making any investment decisions. That's it for now. You have a great day, and I'll see you in the next video.